What a violent way to end off the day in the stock market today, guys. It's crazy because when we started off Power Hour, and I mentioned this in my previous video today, the markets actually were green and they rallied into Power Hour. Then it seems like soon as the clock struck 3:15 on the East Coast, everything started to collapse. SPY went from up above 450, almost 451. It went all the way down to 445. It dropped about 1.1% heading into close. We had Triple Q go from about almost 59 down to about 354. That dropped 1.4% into close. We had the Russell 2000 drop, let's see here. This dropped about 0.9% into close, and I'm assuming the Dow didn't do that bad, but still it dropped into close about, 0.9%, same as the Russell. So we were coasting up heading into the end of the day, then all of a sudden we had this cliff dive. So we got to break down the markets in this video, some earnings reports, what I'm doing. You guys know the drill, so hit the like button, subscribe, join my Patreon, link down below, and make sure to get your 5 stocks from Moomoo. All you have to do is use my link, deposit $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. Get your money, link down below. And now let's dive deeper into these markets and let's talk about some earnings. So let's go back to SPY. SPY, again, you guys should know at this point, tracks the S&P 500 and talk about volatility. We weren't just volatile at the end of the day in Power Hour. We were volatile throughout the whole day. We ended up opening up at about 449. We rallied to 450. That was at about 10:30 a.m. on the East Coast. And then at about 12:30 p.m., we went from 450 down to about 446. That was at 12:30 p.m. And then we saw the rally into Power Hour to then dump into close, which we already talked about. So the volatility is continuing, even though the VIX somehow, I don't even know, but somehow the VIX went down today, down 1.5%. I thought the VIX should have been up at least 2-3%, but hey, I guess I'm wrong on that. And if I pull up this 20-day chart on SPY, where we're hovering right now is right around 448, which I've mentioned before. 448 needs to hold for SPY, and quite frankly, we got to get back over 455, 460 for the bulls to really gain control here. And as of now, again, we're right around 448, and we're also right by the 180 moving average on this 20-day chart, which let me tell you, if this breaks and we get a death cross, let's say the 50 SMA, which it looks like it wants to cross under the 180. It hasn't done so yet, but if it does do that, which is known as a death cross, this might end up going down lower. So we have to be careful. Same thing with Triple Q. Let me pop that up. Triple Q, wow, are we already seeing a death cross? We might almost, yes, we're almost seeing a death cross on Triple Q as we ended up, like I said, selling off into close. That got us under both moving averages on this 20-day chart, which is not good whatsoever as Triple Q went down 0.8%. I forgot to mention, we actually had a red day. Other than the Russell, we had a red day. The Russell went up 0.5%, NASDAQ down 0.8 at close, S&P down 0.4, and the Dow pretty much broke even, but since it sold off into close, I'm going to consider that a loss for the day for the Dow, even though it broke even. So overall, we had a rough day in the markets. The death cross could be right around the corner for Triple Q. If we end up taking out the lows from, what was this, on Friday, 351, this might end up going back down 340s, 330s. Don't be surprised if that occurs. With all the volatility, we have the CPI number coming out on Thursday, which economists, I believe the estimate, we talked about this earlier, but just to reference it again in this video, I think the estimate's about 7.3% inflation. So if we get worse inflation, these markets are going to be more volatile. They're probably going to go down more, and we got to be prepared. So let me know your thoughts. Drop me a comment down below. Hit the like button. Do all that stuff. You guys know what to do. Get your 5 stocks from Moomoo. Link down below. And now let's talk about some earnings reports. And you guys know how I roll in earnings season. Number 1, I don't gamble on earnings. I'm not buying stocks hoping they go up or hoping they go down after their report. I don't do that crap. That's a bunch of crap in my opinion. It's gambling. You might as well download the DraftKings app and throw some money on the Bucks money line tonight. I don't even think the Bucks play tonight. But you might as well go sports gambling over gambling on earnings. I mean, that's just the reality of the matter. So I'm not doing that. That's number one. And number two, I don't like looking at the earnings before making the video. It makes it more fun for me. So we're going to get some live reactions. Number one is TTWO. Let's take a look here. TTWO reported earnings. This is Take-Two Interactive, big video game company. If you guys didn't know that, big competitors to Activision, EA. They reported earnings. Oh my goodness, and the stock is up to 188, or at least it did shoot to 188. And mind you, it closed at 175 today, so it shot up 13 bucks. It dropped down to about 164, so then it went $11 in the red, and now it's pretty much back at break even. So talk about volatility for Take-Two. Let's see what they did here. They did a $1.24 EPS that barely beat the 123 estimate, although it did still beat. And we got sales of $866.12 million versus $879.58 million. So they missed sales, they barely beat EPS, and they raised their full year 22 net bookings guidance to $3.37 billion to about $3.42 billion. Not too bad. They did about adjusted EPS was $1.32. But overall, it seems like this report was below the Wall Street estimates. So why did the stock shoot up then? That's interesting. Crazy how the markets work. Is that shorts covering? Probably not. I mean, I don't think this is a high shorted stock or a high short interest stock. I doubt it. But we got that initial pop anyway. Then we ended up dumping down 164. Now we're back to 173.74. Like I said, we are pretty much at break even after market hours here. So Take-Two Interactive, you guys know they recently they bought Zynga in an all-stock deal. I think it was for about $11 billion. And I'm not sure exactly the details on that, if they're moving forward with it. We're probably going to get some more insight in the earnings call. I should probably tune into that. But yeah, they did $11 billion for Zynga in an all-stock deal, if I remember correctly. And at this point, a big resistance coming up, guys, is 182, which was the high point in the end of 2021. That was broken here in the aftermarket hours, but we're now back under 182. So overall, this week, next week, the next couple of weeks, who knows? If we break 182, just know the next major gap to fill for Take-Two Interactive is going to be up to about 195, maybe even higher. So watch out for TTWO and Tyson Foods, guys. Did we not talk about Tyson Foods yesterday? They ended up destroying earnings. They did EPS of $2.87. Get this, versus the $1.90 estimated. So they destroyed EPS. I'm talking they almost beat it by $1. So crazy EPS number. They also beat revenue, $12.93 billion versus $12.18 billion. And the stock went ballistic today. It went up 12.2%. Let's see if we have any guidance. Not seeing any guidance. But this has to be Tyson Foods shares are trading higher, yada, yada, yada. Oh, listen to this. Chicken sales volume. Oh, my God. Chicken sales volume increased primarily due to increased live production, strong demand. Pork sales volume up slightly, a strong global demand offset by impacts associated with challenging labor environment. Beef sales volume decreased due to impacts associated with challenging labor environment, increased supply chain constraints. So it looks like they're having a lot of demand with chicken. We obviously know the inflation when it comes to meat prices is unreal right now. We're not going to get into that in this video. We're going to talk more about CPI on Thursday, guys, and probably more on Friday. So, yeah, we're not going to talk about that, but just know these meat prices, they're going up. And there's a lot of demand for meat right now. There's a lot of supply chain problems. This stuff is a huge freaking mess. So I'm not going to invest in Tyson Foods, but just know they're doing pretty well right now. They crushed EPS. They crushed revenue. The stock went up 12%. And maybe it's because of me, because I eat a lot of chicken, guys. I do eat a lot of chicken, but then again, I don't buy my chicken from Tyson. I like to buy. I don't even know what I buy. I just buy whatever they have I go to Wegmans. I go to Wegmans. Wegmans is nice. I sometimes get the organic chicken thighs. If I want to splurge a little bit, I get a little organic, but usually I'm just getting the chicken breast, guys. That's for all you chicken eaters out there if you wanted to know that. So Tyson Foods, they're crushing it. Would I buy the stock here? No. It needs to cool off. It ran up too much. If it starts coming back down, low 90s, that could be a price to potentially strike at. So keep your eyes on it. Next one, Simon Property Group. If you guys didn't know, this is an American REIT, real estate investment trust, that invests in shopping malls, outlet centers, community lifestyle centers, plus more. It is the largest owner of shopping malls in the United States and is headquartered in good old Indianapolis, Indiana. And today alone, the stock went up 2.6, or the REIT, shall I say, went up 2.6% at close, and now after market hours, it has given back all of that gain. It's now trading at 143, and it actually got all the way down to 139 after hours. So let's see what they ended up doing here. Let's see here. EPS $3.09, up from $2.17 year over year, so that's good. Sales $1.33 billion versus $1.24 billion estimated. That is also good. And let's see here, funds from operations, because REITs are different from stocks, guys. So you got to look at different metrics. Funds from operations $11.50 a share. Or they see full year FFO $11.50 a share to about $11.70 a share. They see full year EPS $5.90 to about $6.10. So not too bad. It looks like they did beat sales, which is good. And if we look at this 4-hour chart, Simon Property Group, and I've mentioned this before, but I'll say it again, it is right by the bottom of the wedge here. You guys can see it, and it is trading under both moving averages, which is a bit worrisome. We're also seeing a death cross, which is also worrisome. So if this thing collapses under, notice this. This is interesting. Notice how we held 139, guys, right after hours here. We held 139. That was support end of January and middle of January, more towards the end of January. If we break under 139, we take that support out, we end up breaking the bottom of this wedge, it is going to be a bloodbath, in my opinion, in Simon Property Group, at least in the short term. This could probably end up going from 139, if it collapses under that, straight down to the 120s. I mean, there's no support until 120s at this point, or at that point, if that were to happen. So keep your eyes on Simon Property Group. You know, I'm personally into REITs myself, although I don't own Simon Property Group. I own a couple of different ones. All you guys in my Patreon know this. I bought these recently, actually. I own Vici Properties. They own a bunch of real estate in Las Vegas and other parts of the United States, but a lot of it's concentrated in Las Vegas. They own a lot of golf courses. I own Vici. That one's great. I own Realty Income, which this is probably the safest REIT out there. They own a lot of real estate, 7-Elevens, Walgreens, I think CVS, LA Fitness, a lot of these type of locations, they own the real estate. That's Realty Income. I also own, what's the one I just bought recently? I started buying it. Crap, I forget the name of it. It's a REIT that owns a lot of warehouses, Amazon warehouses, FedEx. It has a lot of big, what's it called here? Customers, or not customers, people they rent to, right? Companies they rent to. I'm forgetting now. This is bothering me. What is it? Dang it. Anyway, you guys probably know what I'm talking about. Drop me a comment. Let me know if you know which one I'm talking about. I feel like an idiot right now. Either way, I own that. I own Vici. I own Realty Income. Those are the three REITs that I own. And let's talk about Amgen. AMGN, they just reported earnings this aftermarket hour session, and they did $4.36 adjusted EPS versus $4.12 estimated, so they beat adjusted EPS, but they missed sales, 6.8 versus 6.88 billion. And if we take a look here on the 4-hour chart for Amgen, this is struggling a bit under, let's say, roughly 235. Yeah, 235. That is a big resistance for Amgen right now. We got hit there back in the middle of January. 235 was also support back in June, also in July and August. And mind you, we haven't been back over 235 since then. So there's a lot of resistance. In my opinion, this needs to break out of 235. And as of now, they didn't do that well with earnings. They missed revenue. They beat EPS, which is nice, but they missed revenue. We might not be getting out of there. And on top of that, I'm seeing a head and shoulders clear as day here on Amgen. We have the left shoulder. We got the head. We got the good old right shoulder. If this takes out the 180 SMA, if we fall under 220, it's going to be a bloodbath for Amgen. But if we start getting up above 230, 235 again, it's going to go the other way around, probably a breakout. But we're not there yet. It's looking like more of a head and shoulders is playing out, and it wants to go a bit lower. So that's Amgen. Chegg is another one, which just reported, let's see here, this went up 3.6% on the day. Now it's sitting up, wow, it's up over $2 after market hours. Let's see here. And I'm actually typing here on my on Google what that REIT is, because it's freaking eating me alive right now. I want to know what that REIT was. I freaking forget, man. This is pissing me off now. But either way, Chegg is, I can multitask here. Chegg just reported, again, it's up over $2 after market hours. And let's see here what they did. They ended up doing earnings of 38 cents, EPS of 38 cents versus 31 cents estimated, so they beat EPS. Revenue came in at $207.5 million versus $195.2 million. So nice double beat for Chegg. Ticker symbol, oh, that's what it is. STAG. That's what it is, guys. I'm looking here as I'm talking. I'm sorry I keep going back and forth, but I needed to get that out of the way. STAG is the ETF the REIT that I bought. Ticker symbol STAG. You know, a lot of big warehouses. It's a great warehouse REIT. Anyway, for any of you guys that wanted to know that. Back to Chegg, CHGG. Again, double beat, pretty nice. It's up $2 after hours. In fact, it's freaking ripping after hours. It might go, oh my goodness. Look at that. It closed at $27 and it went to $32 after hours at its peak. That was up 18%. And now we're trying to get back over 30. So this thing looks like it's finally trying to reverse. I mean, from months of just getting slaughtered, this stock, which, I mean, it's been a bloodbath. I don't even know what else to say. This stock was $115 a year ago, and it just hit $23. So it's down 80% roughly. And now we're slowly starting to turn around. And the truth is, at this valuation, I'm not saying to go buy Chegg blindly. I'm not saying that. In fact, I have to do a lot more homework. But in this valuation, the stock's down 80%. Now it might start finding a bottom, because I don't think Chegg is a worthless company. I don't think it's worthless. I mean, I think it's a pretty decent company. It's not a cream of the crop company, but it's not crap. It's kind of in the middle. Now that it's come down 80%, maybe some people are going to start picking it up after a couple of good earnings reports. Maybe the risk reward is there now. And again, I have to do more homework. I'm not too well versed in Chegg, but hey, it's starting to rip. It's up 20% almost after market hours. So watch out for that. We had Facebook today, guys. Facebook went down even more today, down 5.1%. And we had Square. Both of these went down over 5%. So Square has just been massacred. I mean, from $289, now it's $100. The stock's down 65%. And the truth is, it's probably still overvalued. I'm thinking about doing a more in-depth deep dive video on Square. And I'm starting to do a little bit of research on it. I've done research on it before, but now I'm just kind of refreshing, looking at the numbers again. This stock is still pretty overvalued. Right now, even though it's down 65%, the market cap on Square is still about $58 billion, and the PE ratio, it's actually $59 billion. The PE ratio is over 100, so it's still pretty overvalued from a PE ratio perspective. And if it gets down, maybe if it cuts in half again, maybe it goes down to 70, even 75, 60. That's where it could start becoming an interesting deal. And I mentioned this before this whole crash, and I said one of the stocks, and this was a while ago, I said this, one of the stocks I regretted not buying during the 2020 crash was Square. It was at $30, and it ran all the way to almost 300. I'm not sure if I said that because of hindsight, of knowing it went up a lot. I don't know. I mean, probably that was part of it. But now that it's coming back down under 100 almost again, I think it's time to start seriously looking at Square. And again, it's a bit lofty still, but if it starts coming down even more, now might be the time to strike. And if you guys, and I'm not telling you what to do, I'm kind of talking out loud for myself here. And you guys know I already bought Facebook on the dip. I initiated a position, very teeny tiny position at about 248. I bought more at 238 or 237. Now it's trading at 224. So the truth is, I'm looking to buy more. I didn't buy more today, but if it starts falling down again tomorrow, over the next couple of weeks, I'm kind of giving it time. I don't want to rush into it. If it starts coming down even more, I'm buying more Facebook, guys, and especially if it gets under 200, which I'm going to be shocked. If Facebook gets under 200, if we're talking a clean 50% drop for Facebook, I'm going to be pretty surprised. And I'm going to be buying more of the stock. So, yeah, Facebook, keep an eye on it. CCL, last one for today, guys. Make sure to hit the like button if you are finding value in this video. As always, I appreciate each and every one of you. CCL today went up over 7.5%, almost 8% on the day. We closed above $21, which was a big resistance all of last week, and I believe the week before. So now that we're gaining momentum out of here, look at this chart on the 4-hour. Or look at this time frame here. We do have a bit of head and shoulders action, which is a bit worrisome. We have the left shoulder right here. We got the head right here. You guys can see it. And then we got the right shoulder right around there. But we're testing the neckline now at about 21.50.22. If we break 22, this has some runway, in my opinion. It might start going 23.50, which is the resistance of the head here, of the head and shoulders. And if that breaks, we might go back to 25. That's the next gap on CCL. So watch out for it. It seems like momentum's building up in this one. It hasn't completely erupted yet, but it slowly looks like it's getting there. It's trying to, at least. So that's it. Hope you guys found some value in this video. If you did, hit the like button, subscribe, drop me a comment, join my Patreon. Make sure to get all my you can get all my buys, sells, call outs, all that good stuff on Patreon. Link down below. And don't forget, get your free money from Moomoo. Use my link, deposit $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. That's on Moomoo. Link down below. I'll catch you guys in the next video. Thanks for watching again. As always, keep crushing the market. Stay safe out there. Peace out.